Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec from Bloomberg Radio.
There's another interesting data point when it comes to U.S. economic activity. We love this. With more and a look at the broader macro backdrop, we head to Washington, D.C. That's where we find Bloomberg News global economy reporter Enda Curran. Enda, good to have you here. We do want to get to that interesting data point. Tim and I have been talking about this a lot. First up, though, the economic data today, the clues that we've got throughout this week, the retail sales data, which is what we're going to get into with you a little bit more. Anything that we need to know about the bigger, broader kind of data set that we got this week?
Well, I think on the housing data that you mentioned there, it just reinforces the idea that the housing market continues to be broken. It's kind of stuck in this state of high interest rates, surging strong demand for houses, but high interest rates and low stock turnover. So it's kind of stuck in a rut there, Carol. But more broadly, I think the mix of data this week, it sends mixed signals, but the broad takeaway is that the economy is continuing to slow at a reasonable pace, not a crash landing or hard landing or anything like that. But I think every week we seem to get a new data point suggesting things are coming off the ball a little bit. The way policymakers want it, but the big question going into the second half of the year is how much slower will things get?
Okay, well, speaking of things getting slower, it's the Businessweek newsletter that came out just yesterday, and we can't stop talking about it, Enda, because we talk a lot about different data points and the economic data that I think it's fair to say kind of rules our lives here at Bloomberg in a good way. But there's also the anecdotal data that's really helpful that our reporters around the world go and gather. Talk a little bit about what one convenience store CEO is telling us about the state of the U.S. economy.
Yeah, so to your point, this was a bit of a step away from the raw numbers. Yeah. I spoke with the CEO of one of America's biggest convenience store operators, Arco Core. Ari Cutler is the CEO there. So I had a chat with him. For context, he runs what he calls stores in real America. These are small towns, Main Street, sometimes in border areas. So he's on the front line of the trends. And what he's seeing among his shoppers, his consumers, is that they're spending less. In particular, they're spending less on cigarettes and spending less on gasoline. Now he reckons it reflects the high interest rates, the mix of inflation, and of course fluctuating gasoline prices. But again, he's not saying this is a crash landing or anything, but he's saying it's different to what it was last year. Consumers are coming to his stores, are being a bit pickier, a bit choosier. They want bargains, they want value. He's seeing promotions for his hot dogs and his pizzas, enticing customers to go to that direction because they're watching their cents and their dollars. So it's a tale from the ground. And when you speak to people like that, it kind of adds to the idea that what the official data is telling us, that things are cooling from that big boom last year. And this is what I was trying to say earlier on, that things are cooling, okay, but the big question is just where will it go from here? Will this glide path continue in the second half of the year, or will it be something bumpier? But yeah. People seem to be getting more careful with their money, that's for sure.
Yeah, and it feels like it mirrors so many of the conversations that we have around the newsroom or with colleagues or with friends and family about just, making choices about where they're purchasing, or just still kind of cringing at some of the costs of different items. Having said that, it does feel like this momentum around sluggish, slowdown, it's not like everything's falling off a cliff, and I don't hear a lot of people talking recession here in the U.S.
No, and that's because the jobs market is so strong. And as long as the jobs market is strong, people have money, they will pay back their mortgage and they will go and spend. Of course, they might be a bit more careful how they spend, but it's when you have unemployment in free fall when things change dramatically. But again, the labour market, we see some cooling. Even the CEO I spoke to, he made the point that, a year ago he was really struggling with either filling positions and turnover. He still is struggling to fill positions, but he has noticed things are better than a year ago. Staff aren't walking out the door the way they were, they're hanging around, and he thinks that's a sign. That's a sign they have fewer options.
Yeah, that's a really interesting data point as well. I want to get back to this one comment that I had to read a few times, Enda, in your piece. It's that people are moving to more valuable items and just not spending the money they did in the past. What did he mean by more valuable items?
What he's talking about there is looking for value. He reckons he's never seen as many promotions, he said, by the way, in his time. He's been in this business 20 years, and obviously he's running his own promotions, but the the people that he buys products and goods off, they all want to run promotion as well, because everyone's looking for a bargain. Remember the backstory, household debt is at a record level, delinquencies in credit cards are picking up, so people are feeling some strain out there, and that's why he thinks it's all funneling into when you walk into a store, you're just not splashing the way you were last year, you're being a bit more careful about it.
It's interesting to read your piece and also think about what we've seen from companies like Celsius Holdings and Monster Beverage in recent weeks. There have been some channel checks by the folks over at Nielsen that said there's been some softness in that category. And if I think of something that's sold in convenience stores that is kind of pricey, it's energy drinks that have been so hot in recent years. And if people are pulling back on that end, that could be a signal. Yeah,
for sure. The products, by the way, one of the other products that Ari identified was cigarettes. And that's one of his biggest sources of revenue and sales in the convenience stores, but people are buying cheaper tobacco products rather than buying cigarettes. That's a trend, a clear trend that he's noticed, and he says when you see that, that's when he knows things have changed, and that's why he's making the comments that he is.
I have to say, I'm not a smoker, but I didn't realize a carton is between like $30 to $60 in the United States.
It depends where you live, because the taxes are such a big part of it. Like New York City, they're extremely expensive.
They're crazy. I feel like this also, though, Enda, kind of fits with what we've been talking about McDonald's, like bringing back the value meal. We're seeing kind of a little bit of a kind of price war, if you will, among some of the fast food restaurants. Real quickly, though, 25 seconds, the U.S. economy versus the rest of the world still doing fairly well?
Still doing very well. Wages going up. People have jobs. The recovery has been so much stronger here than the rest of the world. No hard landing. But as I say, let's see how it all plays out into the second half of the year.
All right. I love metrics like this.
It's great.
Love it. Enda, thank you so much. Have a great weekend. Enda Curran, he's our global economy reporter at Bloomberg News, joining us there from our Washington, D.C. bureau. I do feel like it's like when we get the beige book, all right, anecdotes and so on and so forth. I think these are things that tell you so much about what's going on in the economy.
Yeah, really, really cool stuff. Also, it's the company has brands like One Stop, Admiral, Breadbox, Corner Mart, Dixie Mart, Easy Mart, Flash Market, Handy Mart, Jets, Jiffy Stop, and more.
Yeah, so
they got their hand on everything.
And they see a lot, right? And this dude has been doing this for like 20 years, so he sees a lot. He might not call himself a dude. I call him a dude.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
It is Triple Witching Friday. We've all been saying it a lot.
It feels a little spooky, doesn't it?
I don't know. Is it really? You know what it's all about.
Let me have
witching,
it, Carol.
derivatives, contracts tied to equities, index options, and futures, all maturing.
Yeah, easy for you to say.
Yeah. Okay. So it's a reminder, too, that we are almost halfway through the trading year, which is kind of phenomenal. A year when we constantly debate over when the Fed may cut rates. And as the Fed reminds us constantly, we are data dependent. We talk about it. Nancy Tengler says, don't focus on that. Here with what we believe, or what she believes we should be keeping our eye on, is the Chief Investment Officer at Laffer Tengler Investments, Nancy Tengler, back in our studio. It is nice to have you back with us. How are you?
I'm well, thank you. Thanks for having me.
Well, thanks for being here, because we do talk about, we kind of as a joke, we'll be like, but we're data dependent. You say maybe don't be so focused on that?
Yeah, I think what, for me, Carol, was when Christine Lagarde at the ECB came out and said, we're raising our inflation estimate. We didn't hit our wage criteria, which was wages rolling over. They actually went up in the EU, and we're cutting interest rates. And then you follow that on the heels with Chairman Powell, and maybe I was over listening, but he said a few things. I mean, previous meeting he was like, well, we'll react to weak labor, and I do think the labor market is softening.
Yeah.
And then on top of that, he said, well, if you're at 2.6 or 2.7%, that's a pretty good place to be. That's a direct quote. And so I'm wondering if the Fed is kind of preparing at least themselves, if not the market, and they raised their inflation estimates for the year.
And yet still said we're going to get a cut.
And we're going to get a cut.
We were all talking about that. Mike McKee was talking about it. Like, what changes Fed Chair Jay Powell at the end of the year, if you think it's going to be okay time to cut,
right.
And yet we're pretty much in the same economic scenario, right?
Yeah. Yes, absolutely. And I think one of the reasons that are eager to cut, you have the Treasury funding this massive amount of debt. Now it's over 50% at the short end of the curve. And so the weighted average cost of the debt has gone from 1.8% last January, not this one, the previous year, to over 3.3%. And the net payments this year are going to be $870 billion according to CBO, which is always wrong. So count that as $1 trillion in just interest payments. Something's got to change.
You don't actually hear politicians talking about that right now, interestingly enough. It's like a sort of a lonely chorus of folks who are talking about the risk that exists there. How big of a risk do you think that is?
I think it's significant because if you're, the CBO quotes debt as net debt. So they say we're at 80% of GDP, but they don't count the debt on the Fed's balance sheet. So we're really at 130. Yeah. And that's third world country-ish. In a growing economy with a really tight labor market, we should be reducing the deficit, not exploding it. And so stocks don't care yet. So we're still pretty bullish. Yeah.
When will they care?
I don't know.
What will make them care?
What's the hissy fit that happens in stocks as a result of
Well, you keep hearing will it be a Liz Truss moment? I do think that's a risk, that the markets, the bond vigilantes just come in and say enough. And then there's even more volatility. I mean, I've been doing this for 40 years. I've never seen so much volatility in the bond market.
I will say it's really interesting. I do feel like investment professionals like yourself are talking a lot about it. And at some point, the government has just so much money to play with. Mm-hmm. And so where do they cut back? And then how does that impact the economy? I feel like that's when maybe citizens start to sit up and take notice, perhaps.
Yeah. I think they're starting to, because what I think the average person knows is that all of this fiscal spending has driven inflation. And there's only, as critical as I've been of the Fed, there's only so much they can do. Yeah. I mean, they've got one hand tied behind their back because the spending just continues. And, we still have a lot of appropriated but unspent funds, in the trillions of dollars that the administration is going to try to get as much of that spent this year as they can. I don't know how much that will be. But
you've been critical of the Fed, but one thing that we've heard from Fed Chair Jay Powell several times in recent months has been talking about the Fed's independence and his own independence. And there have been some questions about what happens if President Trump wins in November to the independence of the Fed. How are you thinking about that?
So I think he doth protest too much. I think he waited a long time to raise rates. And I was at a dinner with...
You think Jay Powell protests too much or Trump does?
About his independence, because I don't think he acted very independent. I think it was a pretty political move to hold off on raising rates as long as he did. And that really allowed inflation to get out of control. I was at dinner with a prominent senator, and he basically said, we all know that he was waiting. And I've never heard anybody say that out loud. So I think they should be independent. I don't think there's anything Trump can do if he is elected except go on X and berate him.
Right. Well, I do want to point out that perhaps if Jay Powell were sitting here right now, he would push back and say,
he would.
At that point, we thought that inflation was indeed transitory. It was supply chain driven. We didn't think it would become as entrenched as it did in the American economy at that point. But
yes, he would say that, and I would say you were still way too late. The rest of the world saw it, and they waited way too long. And we didn't see a hike until March, when inflation had been really bubbling up pretty dramatically since the previous year. And we were writing about the fiscal spending back then. It was very lonely, but
back in
2021. Yeah.
The other thing, I think it's also fair, right? There's been so much liquidity thrown into global markets, right, Nancy, because of the pandemic, and we're still kind of figuring out how it all plays out. Right, and keeping up with it.
Right.
And that's what we're talking about. There's still a lot more liquidity out there.
Yeah, and it's interesting because if you just think about all the old rules, like what did everyone think when rates went up? They thought it would hurt technology stocks. They've been the biggest beneficiary because they had fortress balance sheets. They'd already refinanced their debt, and their interest income. No, it's exploded.
Yeah.
And so
they're making money on all that money.
That's right.
It's on their balance sheet.
A lot of money, Karen.
Yeah, exactly. Yeah. All right. Having said that, the thing you say we should though is listen to what companies have to say. Yeah. I mean, I get excited about earnings because I do feel like
earnings.
I feel like it's a gut check.
We love it.
We peel back a little bit of the layer, right? And we hear from companies about how things really are and whether the narrative, the valuations, whether or not they make sense. So that's important.
Yes.
We've got a great chart, and I think if we can bring it up, but it just talks about, what we've seen in terms of earnings expectations, blended forward EPS, which is the blue line, and the orange line is the S&P 500. You can see how they've been tracking really well together. But the outlook for earnings continues to rise. That's important, though, what we see and what we hear from companies.
Yeah, it's everything. I mean, that is ultimately what stocks trade off of. That's why I think you ignore at this point what the Fed is saying, what data they're depending on this next meeting, because the trend line in corporate earnings is positive and margins are expanding. Now, not every company, we saw it last quarter. If you missed on any metric, you got clobbered. But if you just look, generally speaking, like in our 12 best ideas portfolio, we had a number of what Bespoke calls triple plays, beat, and raise. And that's sustainable. It's frequently in the area that we've been talking about ad nauseum, which is generative AI, cloud computing, but also in our investing theme of old economy companies that are embracing those technologies. Think Walmart, think Chipotle, which is one of our 12 best ideas. Those are companies that are benefiting from utilizing digitization and all of these technologies.
Autocado, anyone?
Autocado.
You know the Autocado?
No.
It's a machine that takes care of the avocados for guacamole at Chipotle.
Because they're all fresh. It's so time intensive.
It takes so much time to make
all the guacamole.
Got the avocado.
So
Brian Nichol tells us about it all the time.
Yeah, and the Chipotlanes, and they've got their own language.
Yeah, they absolutely do. Nancy, thanks so much. Have a good trip home and a good weekend.
Thank you.
Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Having my baby, what a lovely way of saying how much you love.
We know somebody who's had a lot of babies.
Yeah, we do. Here's some numbers you need to know about Elon Musk. 6, it's the number of companies that Elon runs. 206, the number of billions of dollars Elon is worth, according to the latest calculation by the Bloomberg Billionaires Index. And 12, it's the number of kids Elon has, at least that we know of.
No question. Elon is doing what he can to contribute to the world's population, which makes sense if you've paid attention to what he's said in recent years. In Musk's mind, global fertility rates are not just a crisis, but the crisis. And someone who has paid a lot of attention to what Elon says about this is our own Dana Hall.
Yeah, she, along with Sophie Alexander, write about how Elon wants you to have more babies. That's in the forthcoming issue of Bloomberg Businessweek. Read the story now, though, on the Bloomberg terminal and at bloomberg.com/businessweek. Dana Hall is a Bloomberg News senior technology reporter. She joins us from our San Francisco bureau. Dana, you and Sophie make the point in your piece that despite Elon's alarmism, the world's population is not declining. Yet Musk is correct that the overall rate of growth is slowing. Why is Elon so concerned about us not having enough babies?
Well, to be clear, Elon did not comment for this story. So, but I think that, he's been sort of ringing the alarm bell about this for quite some time. If you look at his tweets and all of his public appearances at the Milken conference last month, he really sees this as a big crisis. And I think it has a lot to do with the changing demography of the United States and, frankly, his interest in colonizing Mars. And he's looking at trends and his own goals. And, he really is encouraging people to have at least 3 children. And but I think that the sort of deeper thing here is that he's not just tweeting about this on X, the platform that he owns. He's really putting money behind it. And he there's really sort of an influence campaign going on here.
Well, I would say, as a recent father, if he wants people to have more kids, he should talk to the folks in Washington about childcare costs and the difficulty in raising kids.
Says the father of 2 young kids.
I'm serious, though. If he wants people to have at least 3, there's a reason why people don't have as many kids as they used to.
It's expensive.
It's very expensive. I know, yes, Dana, that's not what we're here to talk about, but please
I totally agree. I have 1 child, and I live in the Bay Area, and it's incredibly expensive. And there are a lot of reasons why the fertility rate has fallen. Women are having children later in life. It is incredibly expensive. We don't have the nuclear families we used to. People are thinking about things like just the cost of childcare and the cost of college and the cost of just living and the cost of housing. And there's a lot of reasons why in a lot of industrialized countries, not just the United States, but in Scandinavia and Japan and South Korea and elsewhere, that the fertility rate has fallen. But, there's a lot of policy levers that you can push if you want to encourage families. And, instead, Elon has quietly donated $10 million to the University of Texas at Austin, his largest donation to higher education to date. And he's also funding a documentary film that'll feature the professor that he's funding. And so it's just super curious to me how, on the one hand, Elon is very public about his intentions, and yet seeing him get involved in academia in this way is sort of a new realm for him.
Well, that's what I wanted to ask you, Dana. I was listening to you, is Elon mostly talking his book here, about wanting to, develop Mars and all that good stuff? What do the academics say when it comes to what's going on with fertility rates and perhaps populations more broadly? What does academia who study this actually say about what the problem is or lack thereof?
Yeah, so the field of demography is a super fascinating one, and my colleague Sophie Alexander really did a heroic job talking to all of the experts here, and they are very worried that Musk and his megaphone and his money are kind of now influencing the debate, if you will, within the field about just how serious this crisis is. I mean, simultaneously we're seeing a lot of talk about no-fault divorce and abortion rights, and we're seeing women's reproductive freedom being scaled back in state after state. And so there's just a lot of history here that is very concerning for people that have been in the field for a long time.
I think one important part of the conversation, at least here in the U.S., that Carol and I have talked about, Dana, is even though Americans are not having as many kids as they used to, a lot of the jobs that need to be filled are being filled by immigrants right now. And that's really important when you talk about the economic context here in terms of population growth and aging population and who's actually doing jobs.
Oh, absolutely. I mean, who is growing the food in the United States? Who is working in our meatpacking facilities? Who is taking care of your elderly parent? I mean, so when you talk about declining birth rates and fertility rates, you have to, if you look at the world population as a whole, to be clear, we are still seeing population growth. There are different projections, and projections are often wrong. I mean, we know that people have fewer children during the recession. So what's actually happening now is that there were fewer babies born in 2007, 2008, 2009, when we were in the depths of the last recession in the United States. Now all of those kids are about to graduate from high school, and you're seeing a drop off in college enrollment. So there are definitely real world impacts to population changes. But when you include immigration and you include the world as a whole and not just the West, we are still on track to be growing people. That is a fact. And so it's just very interesting to sort of look at how, this kind of fringe movement called natalism has increasingly entered the mainstream.
Dana, does the world at large, does the Bloomberg audience kind of need to keep the head of PWI, Dean Spears?
The Population Wellbeing Initiative.
Exactly.
Yeah.
Do they need to keep him on their radar?
Yes, he's coming out with a book in the fall by Simon & Schuster, six-figure advance. I mean, it's called After the Spike. It's kind of, it'll be like a mainstream book, kind of espousing, I think, a lot of what is in line with Musk's thinking, that we need to really be paying attention to fertility trends. And I think it's just important, billionaires have a lot of ways to spend their money. Musk has a foundation. His foundation is now donating to academia. I think that's really significant and something that investors and customers and people in general should be watching.
And it also said that one of his researchers are going to be joining, I think, President Biden's Council of Economic Advisors, right? So, yeah, it's kind of spreading out.
Yep.
Not saying it's bad. I'm not making a judgment, but I'm just saying, right, yeah.
But Dana, this is also a story about Elon's businesses, because he has had kids with people at his at least one of his companies in the past. So we should note that even though we're talking about what could be his personal views that he's increasingly talking about on X and on Spotify, I was going to say Spotify, but on podcasts.
Doesn't own that yet.
He doesn't own that yet. On podcasts. This is coming out in the work that he does too.
Yeah, I mean, and there are a lot of, to be clear, these are consenting adults.
Yes.
But, like, one of them is currently, like, his employee. I mean, she's an executive at Neuralink. And so, obviously, a couple of years ago, Business Insider broke the news that Musk and Siobhan Zilis, the executive at Neuralink, had twins together. In our story today, like, they also had another child that was previously unreported. So this is definitely like a pattern of his. It's kind of amazing. I mean, it's just sort of unheard of that you would have that going on, I think, in most quarters. But it's a pattern that's been established, and it seems to be continuing.
Well, it's an incredible story, and I think a really smart one, and just kind of getting into it and explaining it and doing the research and giving us the facts, certainly when it comes to fertility and what's going on globally.
Also, as Carol reminded me, some incredible animations on theterminal.com.
It actually made me kind of laugh.
Check it out, everyone.
Dana, have a great weekend. Bloomberg News senior tech reporter Dana Hull.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
A dealership in Phoenix is handwriting paper contracts, engaging creditworthiness using guesswork, Carol.
Wait, what is this, the 1950s?
Yeah, Jeep owner in Alabama keeps calling about when a replacement part will be in stock. A family in New Jersey is waiting for word on when they can take delivery of their new Audi.
Yeah, such is life for auto retailers and their customers across the United States and Canada. This is after CDK Global. We talked about this week. It's a software provider to some 15,000 dealers, was waylaid by debilitating cyber attacks, the barrage beginning June 19th, costing U.S. dealers a burst of business on a federal holiday. CDK has warned that a second incident yesterday likely to keep its systems down for several more days. I mean, this is pretty serious. This is kind of like putting it, like, just stopping it.
Yeah, Keith Naughton over in Detroit on our program yesterday called this program the spine of the automotive industry.
This is how they do it.
So to understand how something like this can happen in this day and age, we're joined by Wendi Whitmore, Senior VP and Head of Unit 42 at the publicly traded cybersecurity firm Palo Alto Networks. Wendi, before we get to the most recent and prominent hack that we were just talking about, explain what exactly goes on at Unit 42 at Palo Alto Networks. It's described by your team as a special forces unit at the company. What are you guys up to there?
That's accurate. So we're really the eyes and ears and the feet on the ground, bringing to life the work that Palo Alto Networks does as a whole, right? Which is providing solutions for our clients in their most troubling times. And so our team respond to attacks.
We're having, ironically, some problems.
Not
with
a cyber attack.
Not a cyber attack, we don't think, with Wendy's connection. They're going to get it fixed over there. We're talking to Wendi Whitmore, Senior VP and Head of Unit 42 over at Palo Alto Networks. I got to tell you, a good reminder that the infrastructure that so much of this economy relies on is so fragile.
Yeah, it doesn't take much. We've seen it, over the years, hospital systems, we talked about ransomware for a long time, and that's certainly an issue. But these cyber attacks and what it can do for an industry, I mean, this is a $1.2 trillion industry. That was the sales last year. And this is when it's at the end of a quarter. There's a sales push. There's a lot of stuff going on. We've talked about how we're almost halfway through in terms of the trading year. But for companies, often they're looking at the end of quarter. And that is certainly something, right? You know it from an auto dealer when they're looking to do dealers. So this is an important time. And you wonder, like what it means, what impact it has.
Holidays big for going and shopping for a new car?
Absolutely.
Yeah,
I've done it.
Yeah, people are off.
Yeah.
The stores are open. Get the family together, go and look at that new minivan.
Right.
Make sure everybody fits in there. Go to sign the paperwork. Oh, sorry, the paperwork's not working because of this hack.
Like, it just slows things down. And then do you kind of maybe think, well, maybe I don't want to do this right now, or maybe I'm going to wait for a better offer. Representatives for Ford, VW, Mercedes-Benz, and BMW all confirmed some of their dealers use CDK and said they're working with those affected by the disruption. Other car companies didn't immediately respond to requests for comment. So we've been reaching out to get an idea of kind of the size and scope of this impact.
Okay, let's go back to Wendi Whitmore over at Palo Alto Networks, Senior VP and Head of Unit 42. Wendi, you were explaining what Unit 42 does. I do want to get an idea from you about how companies and industries really can stay safe when critical infrastructure such as this can be taken down by a hack.
Yeah, so I think the reality is attacks like these and the recent attacks we've seen throughout the globe really underscore how interconnected all the systems are. And so in order to be more prepared for these type of attacks, the work we do proactively to help organizations test their defenses in advance, to be able to have holistic and comprehensive detections at the endpoint, the cloud, the network is critically important, and more so now than ever. We're also leading into a year where we've got Olympics, we've got major US elections, and we're anticipating that attackers are really observing the playbooks and seeing what works and are going to continue to try to disrupt more and more businesses.
Wendi, we always talk about, when it comes to cybersecurity, it's like a little bit of a whack-a-mole. And so I'm just curious how you guys are thinking about it. How do you stay ahead? Are we ever really going to be ahead? Because as soon as companies like yourselves, you figure stuff out, those who are doing cybersecurity attacks, they figure out a different method.
Well, it's like the old, question of why do robbers attack banks, right? And it's because that's where the money is. And so unfortunately, or fortunately today, the data is where the money is. So that said, I take a pretty optimistic view. I've seen our defenses continue to increase. And I think with AI, even though there are challenges that the attackers are leveraging, the reality is that businesses have a tremendous amount of opportunity to leverage AI as a defense mechanism to accelerate processes that previously were manual and to really be able to identify these attacks in real time, which is the key to limiting their impact.
Hey, Wendi, we've talked a lot in recent weeks about the shift in spending in the C-suite this year, as we've seen some of the SaaS companies fall out of fashion and their shares fall this year as a result of companies saying, okay, well, we've been spending for years on the cloud, for years on cybersecurity, and for years on SaaS. We want to start getting into AI. We want to start getting into the hardware side of things, and they're shifting that spending to the hardware, to servers, to chips. And look, we've seen that play out with shares rise of companies that are in that space. How concerned are you that companies are taking their eye off the ball with this shift in spending?
I think it's a great question, but not concerned. And the reason I say that is because the reality is, especially when we look at current attacks, right? What we're seeing is by and large cyber criminal actors who have invested pretty closely and significantly in understanding how business to business transactions and relationships work, and realizing that if they disrupt those components, in some cases, it's actually much more disruptive to organizations than just destroying consumer confidence in them. So as a result, the businesses across the globe are also understanding, they're observing that, and they're certainly investing in mechanisms to make sure that we continue to secure those transactions so they can continue to go on about their operations.
Wendi, where do you guys see as the most vulnerable?
In terms of an industry or a technology?
I am kind of interested in industries. Like I'm thinking about the Bloomberg audience, right? Obviously, an investing audience in a big way, but obviously investments go to all different types of industries. So I'm curious where you see, I think we all talk about kind of as a joke, but not really as a joke, that the financial community, we are so nervous that, something kind of really big happens in that regard. But I do wonder where you think, what industries are the most vulnerable here. We actually saw something with LendingTree. We talked about it last night.
Yeah, that's right.
Right. So we continue to see from a targeting perspective, financial services, manufacturing, and then government actually on the rise. And so manufacturing and financial services have long been in the crosshairs of these type of attackers. But what you're seeing from a recent healthcare or hospitality or manufacturing component is that any industry that relies on these business to business transactions where they have a vendor and a supplier network related to being able to do their business, if attackers can disrupt that chain, then what they're thinking is that these organizations are more likely than to pay a ransom. And so I think the reality is that means every industry is pretty vulnerable right now. The more that we can prepare in advance for these type of attack scenarios, obviously close as many of these open windows as possible in advance of an attack is really a critical key. And there are organizations that are doing that on a daily basis that you're not hearing about in the news.
Interesting. Okay, so I always like to end conversations when I talk to folks like you about
an upbeat note.
No, well, truly, like you see the dangers that are lurking out there each and every day on a company level. What are you doing to protect yourself online, and like what's one thing you can leave us with?
Yes, I think as an individual consumer, everyone has heard do not have the same password in every account. That has never been more true. Use multi-factor authentication and passkeys as much as possible to protect your critical information. Make yourself a much harder victim to compromise than people around you, and that is certainly a good piece of advice for your individual protection.
Amen. I'm multi-factor. I like that a lot. And I'm, when they're like, can we suggest, that, and it's like the different letters, different.
Yeah.
Go for it.
Yeah.
Yeah. Oh yeah. I hate it.
I know.
And
You
it's
gotta use
really,
a password
it's really hard when you're
manager
sharing streaming services.
I would know what you're talking about. I have no idea what you're
Says
talking
the
about.
innocent Tim Stenovec.
Yeah.
Wendi, thank you so much. Have a great weekend. Wendi Whitmore, Senior VP, Head of Unit 42 over at Palo Alto Networks.
Do you have any streaming services that I don't subscribe to that I can get the password up from you?
No.
Okay.
I have enough people on it. I've been denied access.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.